A Martingale profit calculator is a strategic tool used by traders, particularly in binary options, forex, and betting systems, to calculate potential profits, losses, and required investment at each level of a martingale sequence. The martingale strategy is based on the principle of doubling your stake after every loss, so that the first winning trade recovers all previous losses and secures a profit equal to the original stake. While the concept sounds mathematically sound in theory, in practice it carries significant risk, especially during long losing streaks. A martingale profit calculator helps manage this risk by giving traders a clearer view of how much capital is required at each step, how quickly investment amounts grow, and what profit can be expected if a trade wins at a specific level in the sequence. By inputting the base trade amount, expected return percentage, and the number of losing trades, the calculator automatically computes the total investment, expected payout, and net profit after recovery. This is particularly helpful for setting realistic expectations and ensuring that one's account has sufficient balance to support the strategy through multiple losing trades. For example, if a trader starts with $10 and the payout is 80%, the calculator will show that after just 6 losing trades, the next trade needs to be $640 to maintain the strategy, with a total investment of $1,270 just to gain a net profit of $8. These calculations are nearly impossible to manage accurately on the fly during live trading, making the calculator an essential tool. Moreover, some advanced martingale calculators allow users to simulate entire trading sessions, adjust payout percentages, and view risk-to-reward scenarios across different market conditions. They can also provide stop-loss levels, break-even analysis, and maximum risk exposure, helping traders apply the strategy more responsibly. Since martingale is a high-risk approach that assumes the market will eventually reverse in the trader's favor, using a calculator is not just about calculating profits, but about understanding exposure and capital management. Without proper calculation, traders can quickly find themselves in a position where the next required trade size is larger than their available capital, leading to substantial losses. That's why martingale profit calculators are widely used not just by individual traders but also by algorithmic trading systems to automatically control position sizes and manage risk parameters. However, it's important to remember that while a calculator provides mathematical clarity, it doesn't eliminate the risk inherent in the strategy. Responsible use involves combining the calculator with a well-defined trading plan, realistic bankroll, and psychological discipline. In summary, a martingale profit calculator is a practical, powerful resource that brings transparency to an otherwise aggressive and risky trading strategy by helping traders track investments, predict returns, and manage risk more effectively.